So I guess at 4:30, we'll pause in 10 minutes and see the reaction to Apple. I couldn't give a rat's ass, to be quite honest, but I know it's on everybody's mind. 4:29, moment of silence. Well said. All right. So here's the scoop. We got a little tug of war here going on. What's really interesting is that you had a setup for, out of all things, a NASDAQ rally, and we had this rally off the lows here, which has been a pretty decent move, right? We're talking about this little upside liner. So you had this rally off the lows, nice grinding rally too. Remember we were talking about you just don't want that runaway rip where you get 8 straight up days in a row and it's game over. All right, so we had a nice little grinding rally higher, and what was really going to give it a little kick in the rear end was when the dollar and rates started to soften, right? Because all this started to happen, if you remember the last conversation we had, we were stressing the importance of the dollar and yields not breaking to new highs and continuing to the upside, right? That was the only thing realistically that could weigh on any potential squeeze based on how positioning was set up, right? So it's just, this is the crazy part of markets, especially bear market. You get yields and the dollar to soften, right? And look at the dollar, look at this. Okay, so you get a nice breather in the dollar, yields the same, right? You get that breather again. Just we were talking about not making new highs, being up every day, literally. And you have tech earnings, which supposedly were going to be the one spot of the market to hold up the best, right? Because everyone's, again, this is the weird thing about this market. It's like a slow moving death train. Everybody knows earnings are going to deteriorate. Everybody knows earnings aren't getting better. They're going to get worse, right? As the economy worsens, especially as we get into next year. But there's still so much emphasis and focus on what's happening now, right? We kind of hit on that last week, if you remember. What's so important about this quarter of earnings, right? If they're good, it tells us nothing, right? Because everybody's still waiting for stuff to look like shit as far as the fundamentals are concerned. So even if you're bullish, the last thing you wanted to see is better than expected earnings come out of this quarter. It doesn't help you in any way. I don't know. There's not one pro, if you measure pro cons going into this quarter, of earnings, justifying earnings being good as a bullish case. I just don't see it. Right. So anyway, getting away from that rant, you had the ingredients for a NASDAQ tech-led bear market rally. And what happened, you started to see, right, the bulletproof names, people came to quality names, start to show some cracks. And that's weighed on the upside of recent, but really hasn't weighed on the market as a whole, right? The Dow has outperformed, right? You guys see the Dow, that reversed today. The Dow, has been up nicely. See this? This looks a lot different than the S&P and the NASDAQ, right? Good call on the Russell, okay? And the Russell as well. So anything that wasn't, any index that's not tech heavy per se, looked a lot better and held up a lot better than the NASDAQ and the S&P 500. So anyway, that's up until where we're at now, right? So now you have this tug of war here, and where players got to kind of weigh the options between, right? We talked about the Bulls case, right, last week. That was the topic of conversation for us on this webinar. The Bulls were, listen, sentiment positioning is awful. No funds, no no player has any exposure out there to equities at all. Okay. And you got a good shot of the Fed being done. Done meaning not that they're going to cut, but they're at least going to pause and look around and wait to see how much damage they created. Okay. Then when you started to hear that murmuring, that chatter come out of certain Fed members after we spoke, right? So that was the ingredients for the squeeze. You got that squeeze now, and now you got this tug of war the last couple of days between that bullish case, right, where we got a Fed meeting coming up, and you're going to get a little more information and answers to those questions, versus the tug on the other side of bad earnings now from the group of names that were supposed to hold up the longest, right? And again, you see it in the indexes, you see it in the price action, right? The market looks like it's going to rip to the upside the last couple of days as a whole, and you see selling. You know, for those of us who are watching the flow, you see Apple puts and Amazon puts and Google puts literally nonstop. And it's hard for the market as a whole to find any headway unless, you know, you're the Dow Jones Industrials or you're the Russell 2000 or healthcare sector. So that's where we're at. For me, and we spoke about this last week, guys. If you remember what I was stressing to you guys, big picture wise, what we need to focus on and wait for, okay? Trying to find bottoms in the market when there's no signs of real capitulation, right? There's no real major bottoming signs anywhere out there. So we're spinning our wheels for us to try to figure out if it's possible that this low in particular may be a bottom or not. Okay, we could be doing that for the next year, and we're spinning our wheels. What I think is more important for us, now that we officially understand we're in a bear market, this is not just a correction, and we're probably going to need full-fledged capitulation before we can put this in the rearview mirror, is looking for what I explained to you from my experience I've seen in prior bear markets before the indexes even bottomed, right? If you guys remember, I brought you back to 2000, right? That bear market, NASDAQ bubble pop, tech stocks cratered, people, everybody and their mother trying to buy all the internet names and tech names every time they dip, thinking they were blue chip names, looking for a bottom each and every week and month. And these stocks just kept making new lows, right? All those NASDAQ names, you know, from the NASDAQ bubble heights, it wore out everybody. And at the same time, while everybody was looking at these NASDAQ and internet names, tech names in general, trying to figure out where the bottom is, they missed out on these bullish pockets within the market under the hood that had no ties to tech, you know, and got hit pretty hard alongside with tech of the initial selling of that bear market. So it will look like what we're seeing now, okay? The reason we can't really do anything about what we're seeing now is because of earnings. I'm going to give you an example. You see a medical stock or a healthcare name or whatever type of name that's not tech, see some sweeper activity that's decent, okay? In all likelihood, right now, last week and this week, they have earnings, and that action is going to catch earnings. So we don't know if that's legitimate buying or it's just part of the whole earnings activity we're seeing in general. We're seeing everything catch action. So as we get through, especially this week, but more so as we get through this earnings cycle, we're going to get some real answers whether that stock picking that we were discussing last week, the under the hood stock picking, really starts up. Okay. And I'm telling you right now, without being aware of it and looking for it, even when it's not around, you're going to miss it and not be interested in it. I can promise you, and you see, look at the hype with Apple right now. You know, look at the hype behind these earnings. They mean nothing. I don't know. Am I nuts for thinking these earnings mean nothing, big picture wise? Right? Even if these names, let's say, the earnings aren't as bad this quarter. Okay, maybe you get a bounce in them, right? But in all likelihood, if it's not this quarter, then it's next quarter, the quarter after that, the numbers are likely to deteriorate. No? Yeah, exactly. It's a bounce for players to sell and short into. So it's almost futile. It's a futile situation, right? So I think for those of you who are tired of being so tactical or wearing yourselves out for trying to find a bottom in the overall market or the S&P 500, for crying out loud, I think you really have to pay attention to individual names, individual sectors. Because again, like you guys are pointing out, it very well could have already started the process. It's just, we don't have that flow confirmation yet because the flow is cluttered with earnings crap. Is Apple coming out here? I got to look at the time every 3 seconds here. But look, I want to show you a chart from Sentiment Trader. I posted it. I don't know if you guys were around today. Now I got to find it. What was it called again? Subsectors, I think it was. Okay. So this is just showing that even though, you know, the markets may be doing nothing, or some tech stocks are still bleeding, or there's hockey stick patterns, that hockey stick pattern we've been talking about all year. They're all over the yard. You understand? There are going to be other things that are going on underneath the hood. And that's where the opportunities are. If you have any interest in swing trading overnight positions, honestly. Otherwise, you're playing these bear market rallies till you turn purple in the face, whether you like it or not. And they're not easy. As you guys know, they're not easy. You know, they're a little easier to scalp on an intraday basis. And you guys know, I'm dead straight with you. That's all I've been doing, is taking advantage of these bear market rallies on an intraday basis. I'm holding nothing overnight. Yeah, because Lourdes, here's what you got to understand, especially in this bear market in particular. I'm being honest with you guys. It wasn't as difficult in prior bear markets. It was difficult. But if you weren't greedy, you could get in the middle of these bear market rallies and time it a lot more efficiently than this bear market rally. The timing part of this bear market is really difficult, meaning you're likely going to be early getting in as far as an entry into a bear market rally, and you're likely going to be either early or too late on the exit, meaning you can't try to catch the whole move, okay, make your money and get out, or you're going to overstay your welcome and give back a lot of the profits you made in that bear market rally. That's the way the cookie crumbles. We don't like it, but that's the way it goes. It's not easy. It's not easy. Like, look what we got right now, right? You have pretty much all you could ask for as far as a setup for a bear market rally, okay? There was some money to be made here, okay? I'm sure we all made some money on the long side into this momentum here. But now what? You understand? This is now what? Right? If you're smart, you take your money, get out. Right? Or you're trading a lot more tactically, like we said, intraday. You don't have to worry about that, but you're going to make less money on the upside. Okay? But now, this is the tough part. Yeah, well, the thing is, Martin, buying puts, this thing might not be over. And the reason why I say that is, if you do get some sort of Fed pivot, Fed pause, they might run over shorts And you could see this thing go over 4,000. You know what I mean? You could see this thing go over 4,000. No doubt about it. Right? Shorts are nervous. You just had the whole enchilada thrown at this market, right? You have Google missing, Microsoft, for crying out loud, out of all companies, missing. And this market's held up. So it's easier said than done. And you talk to any bear out there, and if they're honest, they'll be the first to tell you they've had just as much of a difficult time playing the downside as longs have. And you know why that's true? You see most bears trying to catch bear market rallies on the long side. I told you back in the day, the bear markets I was involved in, no bear in their right mind would try to catch a bear market rally on the long side. It wasn't worth it. But the downside has been so difficult to make clean money for these bears that they're trying to catch both sides. You understand? And that's proof of how difficult it's been. So, the easy answer, buy puts until, you get run over and you're basically in the same boat as longs. There's no easy trade. There's no easy trade. Trust me, take my word for it. There's no easy trade. Right. That's the other thing. Good point. On the option side, and you can't be shorting, nothing's cheap, right? You're going to spend money to buy puts, and you need to catch a decent move to make some money. It's tough. Okay. Yeah, long dollar was definitely an easier trade. Definitely. One of the few things. You know what I mean? One of the few things without that. 4:30, where are we? Are we up live?
Greater China, the net sales of 15.5 billion, up from 14.6 billion a year ago. See if those iPhone sales set a record for the September quarter, exceeding their internal forecast.
So they beat earnings, they beat consensus. I don't think that doesn't matter. People, they want to hear guidance, and if they're smart, they wouldn't give
FX was a significant negative.
Any pinpoint guidance. Who can give guidance right now? How do you give guidance? You know what I mean? Like Jamie Dimon said, you got a Cat 5 hurricane coming. They missed on iPhones? There's going to have to be something pretty bad in the guidance for this thing to get hit hard without buyers. Kind of like, Microsoft was across the board bad. And this thing's been holding up, right? So, you had downside here. What is, hold on, where are we here? This stock makes me sick, this stock, I don't know why it bothers me. Guess the cult following Yeah, the conference call, I think, is at 5. Yeah, anyway. That's that. All right, Apple's out. Now what does everybody do? All right, so back to, I forgot, I lost my train of thought, but what were we talking about? Oh, the easy and difficult trade. So regardless, anyway, okay, we could be seeing that individual name and subsector divergence that we're hoping for. That's when I hate to use the word easy ever, you guys know that, but that's when trading individual names will get a bit easier for us because you're going to see outperformance there. And the other thing too is, think about how frustrating, even if you caught this bear market rally, if you bought the wrong names during earnings season, you could have got your ass kicked, right? So it's not only got to be right on the timing of the market, you gotta pick the right names. So a lot of that will get out of the picture a little bit for us once we start to see some stock picking and focus on individual names out there. Again, we're seeing little signs. And for those of you who may want to understand how it looks like in regards to the flow, just try to remember what we've seen in a lot of the commodity and energy names and still see to this day. The commitment of buying from sweepers in all these energy names has been incredible. And you can't miss that. That's the good thing about a bear market, is when you see that, when that action does come in, you can't miss it. You understand? Like when we're in the height of the bull, like coming off the COVID lows when things really got greased, there was so much flow. You couldn't, everything was getting bought. So it wasn't like you had any incredible edge from sweeper activity then, right? I mean, you could have thrown a dart at that point and likely made money, whether it was a SPAC or Apple or Kathy name, it didn't matter. So what's different in bear markets, when we start to see that flow, they're going to stick out like sore thumbs, the names and the subsectors that catch it. So you can't miss it if you're paying attention. There's going to be a lot of people who aren't interested. You understand? They want to buy Meta because the stock's down a gazillion points. How much, how low can Meta go? I mean, how low can it go? All right. And unfortunately, you're probably going to see some sort of rally in Meta. I doubt these things go straight down. Right? And it just continues and continues to, like, the 2000 bear market went on till 2000, what was it, 2002, so 2 years. And you know what it took, guys? We went over that, the post 2000 bubble, what it took to get like true capitulation. You had 9/11 go on in that bear market, and you still didn't get full-fledged capitulation. That's how gassed up bulls were going into that bear market. And we might have something similar. We might have something similar. But the fundamentals haven't even rolled over yet. All right, so that's one. Well, again, we'll talk about it a little bit more as we talk about names and the rest of the webinar. The other thing that's important, I think, from this quarter of earnings is for anybody who doesn't care what I have to say and still has an interest in buying some of these names as investments and putting them away, okay? You need to see what we're seeing now as far as earnings before you even think about buying these things. Even for investments, right? How can you in any way think about getting aggressive and building even an investment position in a name because it's down a lot that the earnings didn't even roll over yet? So you're buying ahead of that, right? It goes back to the point I made before about this quarter of earnings. You're buying ahead of what likely is going to be a deterioration in fundamentals, okay? Now, maybe by that point, maybe a lot of it gets priced in, okay? But you'll find out then if it gets priced in, right? Apparently Meta, even though it's down so much, wasn't priced in, right? So you want to see at least that process, which is starting to happen, thank God, because that was another step we needed to see along the way here. You're finally seeing that process get underway where, the fundamentals are starting to crack. And like we said, based on what the Fed has done, and that's the reason they're likely going to pause, right? If we do hear that coming up next week, the reason they're going to pause is because the likelihood is there is so much damage coming from what they already done that they got to chill out and see what the hell they broke. And you're going to see the ramifications of all that, where do you think you can see it? In the economy, in earnings that are holding up well, all that stuff. Like I said, you no matter what, you rather, if you're interested in the name, you rather see the fundamentals deteriorate now, get it over with, let it get priced in, than have it come later on. You know, the only thing that would alleviate that process, in a sense, is if the Fed implements QE. That's basically it. Then you can front run that process. Then the market, a lot of times, will look through a good portion of that process. You understand? They'll ignore bare quarters of earnings because they know, 6-9 months, they're going to turn based off what the Fed's doing now. The total opposite of what's happening now. The total opposite. All right, so whatever names you may be looking at, that's what you want to see, right? You want to see everything. You want to see estimates get cut. You want to see analysts turn sour, right? There's still buy recommendations all over these things. You need them to flip to sell as fast as possible. They always implement hold and sell recommendations near the lows, all right? They keep buy recommendations all the way down. They're notoriously known for that. So that's what you want to see in individual names. But I'm telling you, based on my experience, that's not where the money's at. That's not where the money's at. It's going to be new names, my friends. New names. There are going to be a couple of familiars that possibly buck the trend and do okay, or maybe some names that got hit hard initially were the first to get hit and bottom sooner. But the new leaders, for whenever that new bull market starts to rear its engine, that's where the money's at. That's where the money's at. And unfortunately, for all you guys spitting out symbols, we don't know. Nobody knows. Nobody knows these names right now. Nobody. I'm being straight with you. Nobody knows. Nobody knows who survives these bear markets, right? Enough to thrive when things finally bottom out and get better. Nobody knows these things. You see it, the first signs you see it are, again, in the flow and start to see it in the price action. Right now, a lot of these names that you guys are mentioning that you may like, they look like hockey sticks. They all look like hockey sticks. They're all in the same bag. Nothing makes them any different, right? Their growth is slowing and their charts. Oh, what the hell did I do there? Their charts look like this. Nope. Where'd my pen go? They took my pen away. Oh, here it is. All right, and their charts look like this. Either like this or like this. That's what they look like. Right now, you know what they're going to do? We're seeing, and it's tough for me to buy unless the Fed is closer to rate cuts than we think. But we're seeing a lot of the cyclical names do well. And I don't know if I'm buying that. So example this. All right. So basically what's happened here is their earnings weren't as bad as expected, right? So that's what the market's been pricing in, that these numbers were going to continuously get worse as the Fed does what it's doing, okay? But they've held up better for whatever reason, and you're seeing this type of reaction in the stock. Now, what I worry about, okay, if inflation hangs around, it may be a good thing for some of these companies, like a Caterpillar, or this one too is a stud, Deere, right? These names may be able to hang in there through that process, okay? If deflation takes over based off what the Fed has done, you're going to see these things get destroyed until the Fed starts cutting rates. So, that's the problem, even with energy right now, right? Energy looks great. All the flow is in energy that as any good looking flow. Okay. And the reason in my opinion, the reason that we're seeing that is we didn't get the recession this year. Now everybody is assuming next year, right? Maybe first quarter next year, maybe second half next year. Okay. The longer that recession gets pushed off, the longer these energy names are going to hang in there. And I think that's what we're seeing right now. All right. But as soon as this market gets a whiff of real recessionary signs coming in, deflationary signs coming in, the risk is you see something that happened in 2008 to energy, where it was ripping, roaring, new highs, looked great. Everybody went into energy and it blew up like a time bomb and got destroyed based off deflation. So that's the risk in those things. But the way that people are looking at it now is that's the only place to really make money. That's the only place where fundamentals look good. That's the only place to hide realistically, where there's value at least. You got energy names trading at still 8-9 times earnings, good earnings that have been ignored for ages. So for now, it's okay. But look at all the names we talk about. That's we talk about like the best flow. They buy dips in all these names continuously, right? You guys know this. SU, they're coming up with earnings soon. They've been buying dips in this name forever. This name, I think they're coming up with earnings. I don't know. COP, this thing's had new highs. I didn't even realize that. COP's had new highs again. You know what I mean? Like these names are nuts. Devon, new highs again. So that's why we keep seeing the good-looking sweeper activities here. Here, what was one of the newer ones? PB, I think it's PBT. Is it PBT? PBT. Yep, PBT. All right, so this is where all the quality flow, BTU, AR, all the quality flow has been, and it's nothing new. It's been there for a while. And all the charts look like this over the past year and change, all of them. All of them. But the upside is likely going to become more difficult in these names, because of that risk that I'm telling you. Well, that's going to be a thing to watch as we see the fundamentals of the economy deteriorate and worsen. How crude reacts to that. You also got a war still going on. Russia's still in Ukraine over there, right? I mean, if that ever comes to an end one day, that's another risk. It's just you got risk out there, and it's not as underexposed as it used to be. Nobody owned energy names, right? You guys know. Nobody owned them. You wouldn't buy it. If somebody gave you money to buy energy, you wouldn't buy it. And now, people are hiding out in it. All right. But the point of all that is what I said is that's what the flow in new names is that's what it's going to start to look like. We just haven't seen it yet. I know, I've been talking about this for a couple of weeks now, but now listen, it's earnings now, so we can't see it anyway. There's flow all over the place. Like I said, you don't know what's legit, what's not. But as we come out of earnings season, that's going to be the place to be. Yeah. Yeah, it's just, it's funny because people said they sensed the anger in that tweet that they didn't think existed. What's frustrating to me is when you have people that make this game appear easier than it is. Right? You're in a notorious, treacherous bear market here, and you have people come on CNBC, Bloomberg, or even social media, and like they got this master plan. Oh, if you have time on your side, just keep buying dips in quality. and they're scared to even tell you what the quality is because they know, there's a chance they're going to look like morons if quality gets it. All right, but quality, everybody thinks of quality as, the Apples and the Amazons of the world. I think, I don't know what else they could be referring to, right? Because those have held up. That's what makes them look good if they're telling you to buy those stocks, GameStop. But so that was the reason behind a few of those tweets I put out there, is that, again, from experience, there's no such thing as quality in a bear market. I've seen quality go poof, bankrupt, gone, not trade anymore. I've seen no such thing. And yeah, Enron, WorldCom. I'm telling you, WorldCom even more than Enron. WorldCom was every retiree, anybody who wanted to be conservative and have a name besides a mutual fund that they held on to and didn't lose sleep at night, right, was a GE or a WorldCom. WorldCom went poof, and the CEO is in jail, and GE was on the verge of going bankrupt and had to do a reverse split. So when you get into these times, guys, when shit hits the fan, what's the saying? You see who's swimming with no clothes on? How is it? You know what I'm saying? I'm talking about, right? Yeah, the tide goes out and you see, but it's the truth. You don't know who's going to make it through. You don't know who's going to survive. In 2008, Las Vegas Sands almost went literally one day from going bankrupt because they had no access to credit, and casinos can't function without access to credit. Their business thrives off that. So because of the credit markets locking up, one more day they were locked up. Las Vegas Sands is not around anymore. You don't know what could happen. And that's what I'm saying, as far as like the names, you don't think I wish, or not even wish, that I would have a preference in picking the names I like and choosing them to be the next leaders based off my research and handicapping? Unfortunately, it doesn't work like that. It doesn't work like that. You don't know until it happens who gets through this mess and is able to thrive at the other side. But the one thing I could tell you, again, to beat the dead horse, but from my experience, the new names that come out of it, the one good thing about bear markets, the new companies that do sprout up from a bear market, don't have the headaches, don't have the ownership of shareholders, they're not as crowded of underwater shareholders as some of the old names have. And you get that smoother ride, Again, like all the leaders of this last bull market that you guys know and loved over the past decade. We talked about them last week. Shops, the Twilios, the Rokus, the Netflixes, the Fangs, all these names, they were all new leaders of that bull market. The ones who survived the prior bull market and are still doing well, they went through a long stretch of a tough time, right? Microsoft, we're looking at the chart, how long that stock did nothing. You would have committed suicide if you held Microsoft through the early stages of the new bull market. Stock did nothing, right? Intel is still a dog. You know what I mean? AMD went to $2, less than that. Micron, same thing, single digits. It's funny because Meta, Facebook, reminds me of Micron, of the old bull market. I remember the same lines. Oh my God, Micron's trading at 2 times earnings. It traded at 2 PE for years. And the stock couldn't find buyers. And people were scratching their head buying Micron, putting good money after bad because the thing was trading at 2 times earnings and still couldn't find an uptick. I kid you not. But that's the way it works. That's the way, these cycles work. So that's the story here. All right. So twofold again, just to recap, if you're coming in, I think right now, as far as the tactical rally is concerned, what we want to see happen, right? If you want to see this bull market have some longevity to it, in other words, maybe you get some bullish momentum from now to the end of the year where the lows hold. And don't get me wrong, if that happens, there's going to be some opportunities to take advantage of on a short-term basis over the next couple of months. So that's fine. We'll take that. All right. But in my opinion, what I think we're going to need to see happen for that to occur is kind of what we're seeing right now. You need to see, again, that word marinate, right? You need to see the tactical bulls and bears get frustrated, right? So soon as they think the market's giving up those gains, they're done. They're not playing that bear market rally off the Fed pause anymore. You understand? Then the market can clear and find some upside. All right. So it's kind of those shakeouts that we tend to see. And then this can stretch out as far as time is concerned to the end of the year. Very possible. All right. And what would even be even better, I think, in my opinion, is you have a lot of the crowded names, right, that are weak here. I'm sure they'll have bounces and rally, but they may languish and kind of chop around. And what we may start to see some better action in individual names in different sectors that look a lot better than even the indices. So that's kind of, I think names are, it's nothing new. We've been talking about this the last couple of weeks. But aside from here now, where you could catch a little bit of the squeeze, I think at this point now, we want to focus on names. Because then you don't have to concern yourself with, is there more left to this bull market and how high? This bear market rally, bull market, I'm calling it. Maybe that's a sign from the gods. Or whether we're going to go to new lows. You know what I mean? Because look, listen, I think here we need a breather anyway, right? We were talking about this. You got upside niner here. You need a little breather here at the least, right? But I'll tell you one thing, you get this to start coming in a little bit, you're going to have everybody, including bulls, not just bears, thinking new lows. And I think that can open up the window for, a week or two of upside from there. Okay. For new lows, I really think you're going to need something to break. And honestly, it's got to be something pretty big that breaks, because I think they'll buy that break. You know what I mean? I think they're going to buy. Everybody's waiting for something to break. How about that? Everybody's waiting for something to break, to buy. I kid you not. No, break bad. I'm talking about break bad. Like, for example, you see like the UK, oh yeah, you're saying a break is positive. I got you. My bad, Sahil. Similar to what we saw in the UK, right? Same thing. Right? You hit a little volatility. And then, because the other thing too, guys, I don't know anymore, but the Fed can't be this, they can't be that dumb. They can't be that dumb. They know here they've tightened the spigots a little too aggressively here. And they don't want to play with fire. You understand? So in simple English, they'll be okay with a little bullish momentum here. They don't want this thing, as soon as this thing shoots up over 4,000, they'll probably start to run their mounts again, but they're okay with not being as tight and hawkish here. But some people think you're going to see a dovish tilt next week. What do you guys think? I heard whatchamacallit is was telling their firm that, what is that place again? BlackRock. They think the Fed is going to do 75, and then a little dovish tilt to the lingo there. But they got to be careful not to be too dovish. They got to be careful. Yeah, I think they have, me too. I think they have to chill out. And I think, like we were saying last week, okay, here, the upside, the risk reward here on a rally was worth rolling the dice for, right? Remember we were talking about that? It's not worth getting aggressive into, okay, because you're talking about a Fed pause, not a real Fed put in any way. But unlike the prior lows where we were worried about any rally, the Fed wouldn't want that and lean against it, I think the Fed is going to give this a little breathing room. And there's signs of it already behind the scenes. You know, there's signs of maneuvering already behind the scenes. Yeah, I mean, we hope, listen, Lord, the sooner the better, right? Obviously, we both want that. Unfortunately, the way this bear market's going, they're stringing this thing out. You know, I told you, remember what I was telling you a few months back? The worst fear to this bear market is it turns into something like 2000, where it just gets stretched out for years. And it's looking more and more that way, because you're not, I mean, it's not that bad out there, guys. You know, the economy is not bad. The economy is not that bad. You got housing that's starting to roll over a bit. You know what I mean? But you don't have, there's nothing too scary out there. There's nobody afraid. You know, and that's the other thing, right? They had savings to rely on. They were gassed up, credit cards to bang out. That's all a process, right? So, you know, it takes time. You know, you gotta, those real bottoms, like we've been saying, right? We've been saying this for a while. The real bottom, okay, you're gonna feel it. You're gonna be shitting your bloomers when that bottom has a chance to be real. You know? Yeah, I know, Dominic. That's what I'm saying. The layoffs haven't started yet. The economy hasn't even really rolled over hard yet. That's all coming, Dom. You know? I'm telling you, I've never seen, for where the economy is right now, CEOs, you got to see, like, the CEO measures the CEO sentiment. They're suicidal. They're at lower, CEO sentiment's lower than 2008 because they know what's coming. You know, this is like a slow moving freight train that you know is going to hit. And it's like, all right, when's it going to happen? You know, and what some people fear, this is another thing, Lourdes, that would drive us nuts, is that it doesn't come all in one bang that we're used to. It comes in mini bangs over the course of time. You understand? Like a rolling bear market type thing. That would be treacherous. Yeah, the buy the dip is still out. You're 100% right. All that stuff. But Lourdes, I'm telling you, when it comes, if you can play individual names, I'm telling you, it sounds worse than it is. I promise you. It sounds worse than it is. Because if you have the ability to pay attention to individual names and you're not just trading the same names or the indexes, some of you may even rather have that type of environment. You know, you'd rather have that type of environment. Because I'll give you an example. We're gonna see, like, you see, like, the initial stages of a bear market, almost like a correction. Nothing seems to work. Everything's correlated, right? You need the market to go up for your stocks to go up. Everything goes up and down together. Sentiment really doesn't have as big as a bang for its buck as it usually has, right? So there's nothing really that works the initial stages of a bear market. And then as you get through the heart of that bear market, you'll start to see that those sectors, like I said, those subsectors and names, that's where all that stuff you use as an edge, you can find an edge again, right? So you see sweeper activity in healthcare names, and they're going to be healthcare growth names more than likely. You're going to find alpha in those names. Sentiment, you're going to look at sentiment to measure up entries and exits with those names. Okay, so what I'm saying, so you understand, because sometimes I have trouble putting in clear words, right? Let's say you get bullish sentiment signals. Instead of relying and trying to play the market, we're not even going to care about the market. Okay, there are healthcare names, new names catching action. We're going to utilize that sentiment signal for entries into that sector in those names. You understand? And when sentiment gets heated or right above neutral and is not as bullish anymore, that's what you're going to use to find exits in those names. So the dependence on the overall indices is so much less. You like that? I told you, my pen skills are up there with the best of them. My pen skills and my sound effects, you can put me on the Fox pregame right now. Yeah, right now, Eric, you know who's doing okay? Because I was talking to a couple buddies. One of my buddies, I don't know how he does it. He's got a big enough book to do it though. Pair trades. His best pair trade recently, and you'll understand this, long Netflix, short Apple. Right, or go short. You can even go short like a growthy name. But he's scared to do that because they've sold off so much, those names. You understand? So he's looking at the quality names that have held up well that may have downside, and Netflix just has to outperform. He don't need Netflix to go nuts. So you're right. Those, it's a conservative play, but those are the type of plays that people are finding success with. Right. So look, the long Netflix side of the trade, you make money. Okay. And even if Apple goes up, you just need it to go up less than Netflix. If it goes down, you hit both sides. So that's, but that's the period of a time we're in now. You could do with the bigger names more so than down the line here, Yeah, Tesla, why is that holding up? Is that holding up? I haven't really looked at it though. We were talking about, Tesla. We were talking about the Tesla flow, and that's another thing, all right? Like the action, the flow in these names right now, it's as useless as tits on a bull. There's no edge in the flow in a name like Tesla right now. There's call sweepers, put sweepers, and call sweepers, and the amount of action in Tesla is mind-blowing on a day-to-day basis. Now, never mind, Lourdes. You know what I mean? The action is nuts, So I was making the point to you guys in the room, and those of you who've been around with me know, right? Back pre-COVID, if Tesla caught a $500,000 sweep that was clean, okay, you had the whole steam room buzzing. Seriously, it wasn't even like, should I buy it? Let me look at a chart. If you saw a $500,000 sweep in Tesla pre-COVID, you didn't even think, you just bought it. Because that's how unusual it was to see a clean sweep in Tesla. And when they showed up, they were great trades. Okay. Now, look at today. You see a $500,000 sweep in calls, literally 10 of them in the first 5 minutes of the morning. And then 5 minutes later, you'll see put sweepers even more aggressive than the call buy. It's out of control. Almost to the point where I want to take it off the flow where we don't even look at it anymore. I'm serious. Yes, Praveen, 100%. They're fried. They're crowded. That's the takeaway. You understand? They're crowded, and you have a ton of players that are underwater on positions, that are hedging short positions. You understand? They're not all bets. I'm sure the majority of them aren't even bets. If you're short Tesla and you're worried about a Fed pause, you're going to buy calls to hedge that short position, right? So they do that, you know? So that's what we're seeing in these things. There's so many hands in the cookie jar that it's just, it's useless. It's useless, you know? So like I give an example. You talk about, okay, like earnings season's tough for me, individual names. Like today I traded nothing. Today was awful, but I kind of expected that coming in. I told you guys, I probably wasn't going to touch a thing today because of the Apple earnings. But yesterday it was like, there was one name I played. Okay. It wasn't Tesla, it wasn't Apple, it was DraftKings, you know, because again, caught a wave of weekly buying early in the morning. You know, I couldn't make sense out of Apple or Nvidia or any of these other sweeps, right? But there was an obvious wave of DraftKings weeklies that came in off the open. And, you know, if I was going to day trade any name, you know, it was going to be something like that. Yeah, it happened to be a nice trade because, you know, it lined up perfectly, right? The market was there, everything lined up perfectly. But, you know, I'm just making the point, like, if I'm trading names at all right now, up until recently, that's all I'm playing. It's been awful. It's been awful. Otherwise, it's the same names. This afternoon, okay, I give the market credit. I thought, honestly, the market was going to really fall apart based on the flow. There was Apple and Amazon and Intel put sweeps literally from lunchtime all the way up until the closing bell today, right? It was absurd. Oh, Meta too with the, you know, and by the way, did you guys, we didn't even talk about that yet. Did you see, I'm sure you did, the size of position adjusting in the FANG names today? Oh my God. You talk about crowded trades. You see that fund moving positions around? 17 million, I think, was Google, right? Microsoft too was nuts. So what we're talking about, for those of you who don't know what we're talking about here, there was a fund out there that was moving some positions with time around in these mega cap NASDAQ names. All right, so this is what it looked like when it came in. And, you know, for a split second, but then I kind of was doubting it. For a split second, I'm like, oh man, maybe somebody's really going to start to gobble up leaps here in Google, you know? And then I said to myself, relax, look at the rest of the flow. These names are ridiculous, you know? So then once I pulled up the flow, it was obvious. There were more size like this coming in, hitting bids. So this was the order that came in. Look at this. All right, so this was a clean buy. This was a clean buy. 2024 leaps, in the money leaps. But there were things right after it that were hitting the bid. I posted that, didn't I? Yeah, here was one of them. So you see what they did here? Look, June 2024, 115 calls, they were closing. Yeah, Microsoft, Google, and it was one of the other ones that had it. Was it Meta? It might have been Meta. So the point of the story is nothing clean. Oh, I was highlighting here to tell you that, see, it looks like just position adjusting, a fund just moving positions around. So they're closing the June 115 calls. There were a couple 20, oh, IV down. So this was a seller, closing seller. That's what I was highlighting. So there were several of lines like this that came in. Let me just to give you an idea, right? What it looks like. I just want to show you so you guys know what I'm looking at. if you were just like looking at a scan or whatever, right? Look at this. These are some of the top trades in Google today that mean nothing. All right, so here they are. Okay, look at this one. June 2024, 100 calls, 14 million. See that? Below bid. Oh, this is the one we just showed. So this might have rolled from there. Well, you got other ones too. Look at this. June 95 calls, 13 million. You understand? Puts, look at all this mess. Look at this. Like, these are just the multi-million-dollar trades in this thing. These aren't even, the sweeps we like to look at, the aggressive, six-figure sweeps. Look at this mess. What a menagerie this is. Yeah, I don't know if Amazon or Apple had anything to do with it, but probably just a fund that, based off the stock being weak, wants to adjust, some of these positions. Maybe they're underwater, and they're looking for a higher delta based off where the stock is. Maybe these were in the money and they move them to now these that are in the money. You never know exactly. You never know the exact reasons. But this is, this is not what you're looking for here. You know what I mean? This is not the type of action you're looking for. But in these names, I'm not going to say we're never going to see it again, because I think we're going to see decent flow in these names at some point, even if it's just a bear market rally. But like I said, the edge in those names is pretty much gone. Yeah, and think about all the positioning, right? In these type of names on the way up. Like, forget about just the recent rally, post-COVID. You're talking about years upon years, this Google, funds piling into this thing. But look at this rip is, how much call activity probably goes into this year, especially like a name like Tesla that we saw. You guys definitely remember that Tesla, the flow post-COVID, how much buying there was. So yeah, we forget initially, like when I got in the game, the option market was primarily used for hedging and protection and insurance. That's what the option market was primarily used as. Now it's a casino. But when you get into these type of environments, you see a lot of just hedging, protection, and insurance, right? How many sweeps we see in some of these names that are like 50, 80 bucks out of the money insurance plays? Yeah, Eric, because, in bull markets, you just see those aggressive bets, then people get stuck in these things and need to navigate, need to move things around. They need to move things around. All right. So the moral of the story, if there's a moral, I know I throw a lot of shit at you guys. Sometimes I come on these webinars, there's not much really to talk about. But when I do have stuff I want to share with you guys, I'm kind of all over the place. So I apologize for that. But the bottom line, what I was trying to get at today is, as much as possible, okay, I'm not saying completely, because there are going to be times we want to play off the indexes for bear market rallies, etc. But going forward, we have to work on trying to ignore the overall action at the index level and focus on names, because that's where all the information is at, even if there's no flow in names. You understand? If we're not seeing call sweeper activity in individual names, that's a signal in itself that's telling us there's nothing to get excited about. You know what I mean? There's nothing to get excited about. Chill out, relax, shop with the eyes. If they're aggressively buying names, tells you that, okay, maybe we're getting into a phase here with some bullish momentum that we can profit off of. But it's all in the individual names. You see action in the semiconductor ETF. If they're not buying semis, the names, it's likely a hedge. You know what I mean? It's likely not a bet. Because when these funds, when they get gassed up and they want to buy something like an SMH or a Soxal or even TQQQ, all these things, they bomb the names and they sprinkle some of that stuff on top. You know, that's when they really get excited about that stuff. Speaking of shop, okay, and this is the problem with earnings season. I promise you, you know what the two cleanest sweeps were yesterday? Okay, the two cleanest sweeps, and I think they happened. I don't even know how they closed, but they happened to look well off the off of earnings. No, Teladoc and Shop. Look at, watch this, right? But you had earnings, so you know, who's gonna, you're gonna get excited about Teladoc into earnings after they just shit the bed for like 10 straight quarters? But look at this bet yesterday. And you know, you don't see Teladoc bets like this anymore. Teladoc, you don't see sweeper activity, especially like this. But look at this sweep. All right. So if it wasn't earnings season, all right, or it's a new name, for example, this is exactly what you want to see. A name that doesn't catch any action, unlike Tesla every 3 seconds. And, you know, you catch an opening sweep like this, but you had earnings, right? That was likely the reason. The other one was Shop. And if I'm not mistaken, I think they were selling puts too, weren't they? Weren't they selling puts in Shop yesterday? I think, if I remember correctly. Hold on here. What was yesterday? Is this yesterday? Holy shit. No, yeah. Wait, is it? Yeah, this is it. This is it. So where is they were selling? This is all the action from yesterday in Shop. Where's the put sellers I mentioned? I know for a fact there was some put selling Shop. Oh, here it is. Oh, they were cheap. Yeah. They were cheap. Way out of the money, that's what it was. But, and the reason I bring it up is, you know, that's the type of action we want to see. You know, like it caught my eye immediately. And it's almost like it's to the point now in this bear market, when I see something like this, I know, you know, oh shit, earnings are tomorrow. There's always an excuse, you know, there's always an excuse. Somebody mentioned when I say it's not clean, what do I mean? For the most part, what I mean, your takeaway should mean it's not a clean bet. That's what it means to you. So if you see an order like this come in, and the first thing I tell you, because that's the information I want to get out to you right away, so you don't get excited about it, is it's not clean. It means, one, it's a roll or, you know, attached to something else or tied, or, you know, I've been using that where I probably shouldn't have it in the past. If it's tied to earnings, a lot of times I'll say it's not clean, you know, it's part of earnings flow. But that's when I shoot out the words it's not clean after a decent looking order or rapid fire action. That's the takeaway to you, that it's not an aggressive bet. It's not what you think it is. You know, because that's the most important thing, right? We all want to know. Like, for example, Google, right? You see a $17 million sweep come in. If it's, you know, if I tell you it's not clean, that means exactly what happened. You know, they're moving around positions. So that sort of thing. Does that answer your question? Yeah, a lot of times they're too good to be true. When you see that size, especially a sweep, it's likely not clean. But hopefully, we start to see more clean action in names. It's not going to be like we were seeing coming out of COVID where they light up the board. But I'm telling you, that's a good thing as well, because you'll be able to pinpoint opportunities. You understand? I think the biggest issue for a lot of you, and remember, I'm telling you this, it's especially initially, more than likely, it's not going to be in names that you want the flow to be in. Like, for example, coming out of corrections, okay, pretty much every pullback that we've been a part of post 2009, when you come out of corrections, a lot of the times the names you like to own and trade will be a part of the flow. There'll be new leaders as well, but the names that are leaders already usually lead out of corrections. Bear markets, that's a whole different ballgame. You know what I mean? That's a whole different ballgame. So what we're likely going to start to see, you're going to see a lot of names that are catching the real action initially be illiquid names in the options world. Now the stocks are going to be liquid as the sea. You don't have to worry about liquidity in the equity, but the options aren't going to be liquid. You follow? So what's going to happen is you're going to pull up a chain and you're going to be like, oh man, that 1,000 contract sweep is all of the volume. That's what you're likely to see. Yeah, and it qualifies as unusual activity, right? Because it's unusual. But that's how it usually starts. And then, it broadens out to some names that may be more liquid. But, it's Tesla, wasn't as active, right? Like I told you guys before when we were talking about it. Tesla would catch one sweep a month. So it wasn't as active, and I'm sure people shied away from it because it wasn't active. But then once it becomes this active, you don't want to be a part of it anyway. Yeah, exactly. And some of them won't even trade weeklies, Praveen. A lot of these names won't even trade weeklies. Why is Apple green? I mean, I don't know. You had these names got hit pretty hard. I don't know what the earnings were. Were the earnings okay? I don't know. I don't think it means anything. Oh, you're talking to yourself? Yeah, I mean, you had a couple of these things that really were just awful. And even Microsoft didn't even, it got hit based off the run it had. It's right back to where it started. I mean, this is nothing, I don't even know how much more these things get buried. I'm not saying there's huge downside in these things. I just think they may be dead money in a sense. Yeah, they may be range bound more than anything else. But it's very, very orderly. You see how orderly this is. That's what frustrates the shorts too. And Apple too. Apple has held up even better than Microsoft, right? Apple's been, more of just, look at this. Just looks like one big choppy range, right? Look at this. Apple's down? No? Or no? Am I seeing this wrong? Oh, now it's down. What happened? Something happened? What the fuck happened? Oh, the conference call, right? Yeah. Maybe guidance or something. Maybe they give guidance on the conference call. Yeah, I don't. You'll hear what was said, guaranteed. Though you'll hear it on Bloomberg or CNBC somewhere, or probably come across the wire. So what else? Sentiment wise, all the same thing. Flow, the fund flow doesn't want to crack. You know, the fund flow is still hanging in there. Like, oh, I posted on my regular Twitter yesterday. Barclays had a couple of decent charts. They're over here somewhere. Hold on. Yeah, yeah. Oh, this is look at this. CEO confidence. Nice, huh? Look at this. Like it's gonna break through the chart. Crazy. Let's see. Oh, here it is. Okay, so like, you know, retail fund flow wise, they're chopping around a little bit, doing nothing too crazy, but definitely no capitulation. Here's the allocation, right? Like you gotta see these things come in little by little. US households, just a lot of ownership out there they got to shake out. Where's the one? Oh, here's the one. Right? Oh, no, this is not even the chart I was looking for. They bought more than 4 trillion in equities combined since the COVID lows. That's not even the chart I was looking for. Oh, flows, hold on. That's not it. Global fund flows. I never find this chart when I want to find it. Yeah, the scary one, but that's all right. It's still the same shit, right? You guys have seen it. You guys have seen where they're at. Yeah, that's the only thing that becomes frustrating is, you know, there's a lot of work to be done. Here's the Goldman indicators that some of you asked for that I get midweek. So still, look at this. We've been stuck here for quite a while now. You know, and this is a primary reason why we can't make up any headway. And you know what the problem is too? The fear, right? We were talking about that earlier. Like usually at the end of at the end of a bear market, you get a little bit of a buildup in fear. They buy gold, right? Volatility moves. Like another thing I was looking at recently, like look at this. You're gonna put up a line chart to see it. Oh, I have it on here. Look. With everything, this is similar to, let's say, the NASDAQ bubble blowing, right? Got similarities, okay? Now, again, maybe, you know, the structure of these things are different. Like NASDAQ volatility, NASDAQ 100 volatility, we're gonna need to see a pop on this thing, no? So it was up here, this is a weekly chart, so you can see it all. It was up here into the 2002, right? When the overall market was finding bottoms. Here's 2008. This is COVID. And, you know, we're over here. The reason why, Sahil, I don't think that we're at the end of the bear market, the end, is because of Yeah, it's hard for me to say how close or how far, because things can unravel quick, things can, but the point I'm trying to make is there's still quite a few things that need to run their course. There's still quite a few things that need to run their course, at least some of those things. One of them, Seal, is the question you just asked. Okay, that's another one, Yaya. That's another one. There are put sellers. Let me tell you something. Put sellers, it's not just in the S&P 500. They've been selling everything, including Asia and the Hang Seng, and they finally got caught there. Think about the coconuts you got to have to sell puts in those China markets with everything going on, right? But that mini crash, that was the reasoning behind it. Yeah, put sellers got caught offside. So you've had this buildup of put selling in the S&P 500 and SPX literally throughout this whole bear market. They're not going to get caught. It'd be a rare occasion if they don't get caught. A rare occasion. Nothing happened yet for them to get caught. What happened? Right? What happened? The CPI came in hotter than expected. Nothing happened. Wait till something's going to happen, guys. It's the inevitable. Something's going to happen. The Fed is going to have to take action because something happened. You understand? That's the inevitable. It has to happen. You can't tighten this aggressively and drain this much liquidity at this pace and something doesn't crack. It doesn't have to be on the scale of Lehman, but something's going to happen. That's the tough part. You never know when it's going to happen, right? If we all knew, we'd short into it and cover and go long after it. Nobody knows. People thought it would happen this year. Now people think it's going to happen next year. Who the hell knows? But I told you, the longer it gets stretched out, the worse it is. Okay. And it's weird like this. Okay. And you think about it, I don't know what maybe it's just the way the world works. It's not only in relation to the financial world, where it's like when things go bad, everything goes bad, right? When things go good, there's other things in the world that are happening good. Like, for example, like you got the war in Ukraine now, right? And the threat of nukes and all that shit. In the 2000 bubble, when it blew up, all right, you had all these little mini, right, cycles. That's what I was getting at, Eric. You have all these little mini blowups, like who's going out of business. There was nothing really major that anybody thought would be systemic. That's the word I'm trying to get at, okay? Then lo and behold, out of all things, no one expected it. It was, you talk about unexpected, you had two planes go into the Twin Towers. Right, exactly. Like, think about that for a second. You're dealing with the break of a tech bubble that was juiced up to high end. You got major companies on the verge of bankruptcy, stocks getting destroyed all over the place. So everybody was looking for, like, what's it going to be? What's the major tech name that's going to go bust? What's the major fund that's going to go bust? Everybody was waiting for this big event for a possible bottom, and nothing was happening. Nothing big enough was happening. Then lo and behold, boop, later, Pete, 9/11 happens. All right. And the stock exchanges have to close down for a few days. We're all glued to our TVs. Right? You guys remember? It was insanity. And that if there was a pretty decent low that came out of that panic, but even that wasn't the bottom. The bottom came after that in 2002. Is that nuts? So, like, think about all that agony and pain that went into that. That's what I'm trying to portray to you guys. You know, like we're still at the point now where all of us want something to break, are looking for it. Right? We all want it. We're all asking about it. We all want the bottom. It's not how it works. When it finally does happen, what we're talking about here, like I said earlier, we're all going to be shitting our pants. Yeah, like think about 9/11, okay? Think about 9/11. It gets easier. You thinking about market bottoms after, put yourself back in that time then, right? We were wondering where the next terrorist attack was coming, right? People were scared to go back to the exchange to work because you remember the security there and everything. Who the hell was thinking about a market bottom or anything like that? So that's the point I'm making. That even these major lows, they come late in the bear market. They come with some legitimate fear. It's not you want sound effects, right? There would be too many sound effects for that one. But look what it looks like here. Good call. Let me pull up the chart. Even the charts don't do it justice. Living through it, they never do it justice, but it gives you a better idea. So this was the 9/11, if I'm not mistaken. Okay, you can see major low, tradable low, right? And then there was one more. So like, even if you survive this and we're like, all right, I made it through 9/11, I'm still here. You had to withstand another, like this thing fell off a cliff here. This thing looked like a la 08. It was on the verge of going to zero. And that was the bottom. And look at this bottom. You see this bottom? Okay. It's not like, oh yeah, hop on, everybody. The Fed's cut rates. Let's go to the moon. Everybody's happy again. No, it's, oh man, I'm not buying this rally. You nuts. Even the 9/11 lows didn't hold. And then test the lows. Oh, here we go. Oh, rally. Oh, here we go again. And then good night. Yeah, Rob, it's telling you that people make it sound so easy. That's why I'm trying to give you a little piece of advice. Don't get hung up on trying to discover the bottom. It can only frustrate the living daylights out of you. What I think what's more important is what I was telling you guys in regards to like individual names. Okay. What I'm telling you, the action in individual names bottomed long before this. There were sectors and a good amount of names that were already doing this, even with the market doing that. Okay. You guys may not believe me. There's no reason for me to bullshit you. Okay. I told you guys this. These were the best years of my career. Think about the rallies we had off of 2009 lows, COVID lows. And I'm telling you, right, from here to here were the best years of my career. Okay. Yeah. And, not just small caps, meaning $2 stocks. It was just all undiscovered. Nobody knows about individual names, companies that were thriving. You understand? It wasn't like a SoFi or whatever, Riot blockchain, the $10 stocks bleeding, losing all sorts of money. They were profitable and growing revenues and profits, but they were just being ignored because of the bear market. But money started to just pick them apart. So then, this whole period here, while the market still had lower to go, okay, there was a tremendous opportunity in names. And then this is where the fun happened, right here. Off these lows here, All right. That's where all the names that were already outperforming, that's where all the new leaders started to really take off. That's where, craziness started to happen. The Sharpie on my pen, this indicator, the positioning. There's not much going on there. They trimmed some of their position recently, but no major takeaway. Nothing different than what we've been seeing. Here's what they look like. Like the only thing, but again, this is not something new. The only takeaway from this for weeks now is that they're taking the other side of the rest of positioning, right? So they're making a bet that right now the way positioning is, we don't have much lower to go. You understand? We're going to hang around here. But I don't know what we want to do with that. Well, I'm telling you guys, I know it's hard to do. We're so used to it. We're trying to discover a bottom, and when the coast is clear, it's impossible. Yeah, it's impossible. And considering how far away we may be from that, like here's another thing to keep in mind. If what Druckenmiller is talking about, if that plays out, finding a bottom what's that going to do you? If you're talking about the lost decade, you're going to have stocks, a chunk of stocks that do nothing, that are range bound. You're going to have a market that may have made lows, but is going to rally and come down and test and revisit those lows. You understand? Like it's not worth it. It's not worth it. It's not worth it. We're used to bottoms out of Fed created, rallies out of corrections, those V-shaped recoveries. That the Fed can't do that right now. They can't, that's the last thing they just can't afford to do that right now. That's the last thing they want to do. The last thing they want to do. Knowing your luck, you go on that cruise, we bottom at the end of the week, right? You come back, the bull market will be over. Forget the bottom. You'll come back. It'll be like the bull market's over. Where have you been? No, all kidding aside, I'm telling you, it's in names, and the other thing is, even if you're not into the new leaders, under the hood type names, the way you got to look at it is trades. Everything is just a trade. You know what I mean? That's the way you got to look at it. Everything is just a trade. That's the only way. So like we were saying the other day, it's again easier said than done, but if that's what you need to do, I can't. I'm telling you, I don't have enough faith in my trader skills to take advantage of it. But you get to these points, and you got to find a name that you think will bounce or outperform to the upside. That's what basically you're trying to do, right? It's really tough in this market, though. Yeah, I mean, listen, for me, because of the lack of flow, I'm making it sound even more difficult than it is. But for me, that basically, I base everything off sweeper activity as far as my stock selection. So like I'm lost in space. You understand? I don't even see the light without flow to just find, like, I think it's so random, especially like earnings season. Forget it. You know what I mean? You could have bought Microsoft, which is like the best company to buy, or Google, and the market did rally, and you got screwed because of earnings. Like it's so random. I don't know. I can't have much confidence in doing that. You know? Someone wants me to buy a put, so I can nail the bottom here. I'll tell you, when I really start pooping my bloomer sill just for shits and giggles, I'm gonna buy a put just to help the cause. You know what I mean? But I gotta be honest. I'm gonna be honest in where I feel that fear. Right? We're all gonna feel it. We're all wired the same way. Right? I'm gonna make a donation. Or it is. Hopefully, it's a donation. You know, I don't want to be right and cash in my put, because that could mean the end of the world. Knowing my luck. Knowing my luck, I'll cash the put, I'll make some money, and we'll get hit with a nuke and we're all dead. Right? I'll be bragging about the money I made on the put, and I got nuked right in the head. Right. That was 2008. See here, you heard my stories. I wanted to play the downside, but I'm being dead straight with you guys. Most people won't tell you that. I was too scared to have money at a brokerage firm. And, you know, people were saying, well, why not just play a little bit? You know, throw a little bit of money. It wasn't worth it. You know what I'm saying? It wasn't even worth it. Why? So I make a little bit of money on the downside, and then if the firm goes under, I got to worry about getting my money and all this shit. You know, it wasn't worth it. You were worried, legitimately, people were worried about the safety of their money at these institutions. You know, you seeing them go down, dropping like flies. Bear Stearns, Merrill Lynch was ready to go south. Merrill fucking Lynch. They forced buyout. You know what I mean? Washington Mutual, lines around the corner. They can't access ATM machines and can't get money out. You couldn't make this up. So now I want to go move some money in an account at a brokerage firm to play some downside. You know what I mean? I'm telling you, I was in my bunker. I had no interest in it. All right. Now that's an extreme. I hope we don't get to that type of extreme. But, you know, going back to the point I told you guys a little bit ago about that feeling at the 2009 low, that's what it felt like. I had friends buying gold bars, guys, bars of gold. I said, what the fuck? What are you guys doing with that? I don't understand. Where are you putting bars of gold? What? Oh, yeah. Whoa, when shit hits the fan, what do you think? These currencies are paper. You got to have something that's going to have some value. I said, what are you going to barter bars of gold with the convenience stores? You guys lost your minds. I thought I was in my bunker. Bitcoin. You know what I mean? I'm telling you, I'm not even exaggerating. That was the 2009 low. Okay, 2009 low. Right, the banks, forget it, the banks were dropping like flies. I remember we were watching the flow, and that's what we were doing when it first started happening. We were looking to see what disaster Dr. Doom puts were seeing action, what bank was catching it. So we'd be like, oh shit, AIG, look at that. They're buying the $5 puts, the stock's at 50. You know, like shit like that. That's what we were doing. But then as it started to happen and these banks are dropping like flies, you know, that's when we started to panic. At first we were enjoying it. Then we started to panic. You know, pulling money out of bank accounts because they're not insured. Bank accounts, regular bank accounts. People couldn't take money out of ATM machines. Yeah, exactly. Eric, that's what I'm saying. The end of it was crazy. You know? The end of it was too crazy. You know, and I'm telling you, and you guys seen it in the documentaries and stuff. AIG was the breaking point. They said if AIG would have went under, it was so close they thought AIG was done. They said AIG had tentacles into so many different sectors of the financial world that if AIG went under, it was over with. Game over. It was game over. The financial system as we know it, kaput. Okay. Oh my God, Eric, it'll be the streets, there would be rioting, things burnt up right now, Eric. Yeah, and then that was the fear, because like then AIG, and then I told you Las Vegas Sands. You're talking about what's his name? What's his name? Alderson. The mega CEO, the owner of the time, the founder of Las Vegas Sands. Guy's a multi billionaire. He ran out of money. He can't access credit. And Las Vegas Sands was ready to go under. It was insane. It was stupidity. I don't know what the hell went happen. It's like out of a movie. It was out of a movie. But that's how crazy things can get when once credit starts freezing up. You guys don't really think about it for a second. If businesses can't have access to credit, think about how many businesses can't exist. Right? It's all over with. Exactly. That's what was happening. That's exactly what was happening. Yep. Frozen. Everything was just frozen. Frozen. So, but listen, the financial system this go around, I think someone just made that point. We went through that. So, it usually never happens the same way. Exactly. It's something else, right? That comes about that we don't even, and it doesn't even have to play out that way, because like 2000 didn't play out that way. But take my word for it. When you're close, like somebody was asking me if we're closer, I really don't know. But when when you're close is when you feel that fear inside of your bones. We're all wired the same way. Very few in this game are wired that special way that don't feel it. Yeah, all of us are looking for it. We pounce all over it. Right? Yeah, all of us would pounce on it right now. But when it's close, your feeling that you're going to have, you don't even need to look at sentiment indicators or anything. You're going to feel like you want nothing to do with it. Yeah, it's crazy. It's crazy how it works. But there's no fear out there right now. I'm sorry. There's no people, they like you guys were saying, I guess they had that much, liquidity. They had that much money. They had Bitcoins. They had credit cards, savings. They were given money, for Christ's sake. And, parts of the economy are hanging in there. No, there's no real fear. There's what there is? There's just a lack of interest, right? There's a lack of exposure to equities on the professional side. The people who follow the game closely, like us on the professional side, they see what we see. So what they've done is they've taken down their risk dramatically. They've de-risked. So they have no exposure. That's probably what's holding up this market right now. But you don't have, right, like still saying, he's got people at work who are still averaging down. You don't have that fear. Not even close. You don't have that fear. And you don't even have to look at the indicator. You'll see it. In 2008, you had markets in turmoil running 5 times a day on CNBC like it was the top show in America. Okay, now they refuse to even put markets in turmoil. Markets in motion they put on from time to time, for Christ's sake. Do you realize we were laughing at this? CNBC was running market in turmoil, okay, off the COVID lows into a rally all the way up until before the election. As the market is ripping, you're still watching markets in turmoil every night on CNBC. Right? And now look, you guys know, right? You crack jokes on it. You got CNBC all day long, people talking about bottom, buy quality on the way down. If you have time, don't worry about it. Whatever you buy a year later, you're going to be okay. Now, that's a long way from where we were, where Polyapatia was pretty much guaranteeing upside on SPACs, but it's not where we need to be. You know, and it gets to the point where not only do they don't think we bottom, they're not interested in the bottom. They're not interested. Still, you know, I know you're joking. The funny part about that, in all due honesty, I'm being dead straight with you. I really don't know. You know, I really don't know. I don't think anybody knows. You know, I don't think anybody knows. Not just Meta, any of these names. Like I've seen, you know, again, names considered more blue chip than Meta get a lot more destroyed than this, and this thing is taking a licking. But you guys don't remember like GE being the blue chip that it was with the Jack Welch days. You guys are too young for that shit. GE was like, you want to put your head on the pillow every night and get some good sleep while you have your money invested? Just buy GE. GE and IBM, and don't worry about it. That's what it used to be. Yeah, even ExxonMobil, right? The energy names were in that basket, and they got destroyed. You know, the truth of the matter is, I mean, nobody knows. Look at this. Look at this. Okay, so let's say like GE is Facebook, you know, somewhere over here, right? That's what I'm saying. I'm sure there's going to be some sort of rally at some point in Facebook. I have to believe. But in all likelihood, you know, how do you know it's not this? Look at this. Look at this menagerie. Look how many times you thought that it may have been good to go. And look where you are. And this thing is still here. Still. This thing reverse split. Unbelievable. Our futures are open now. No? I think they open now. So let's leave it on this, okay? I want your honest opinion here, because I just want to hear what you guys feel anyway, because it's been tricky. Because like I said, you got a lot of bears trying to catch rallies these days, which has been adding confusion. First question, do you guys think we rally into the Fed? The Fed is next week, right? Wait, is the Fed next week? Or the week after that? That's next week. Oh my God. Every week there's a menagerie. So now you got the Fed next week. So do you think we rally into the Fed next week? Damn. You know, initially I thought it wasn't next week, it was the week prior. So you have a week of a little wiggle room. Tuesday, well, unbelievable. So there's not much wiggle room here. There's not much wiggle room. Because the reason Gamma Gang seeing 10% event either way, still, right? Yeah, but low probability. No, it's not like they see it as a lock. They just see an increased chance of a 10% move, right? If I remember that correctly. You know, a higher probability of an increased move. And, you know, I'm sure a lot has to do with the put sellers. That put seller shit's out of control. Out of control. But yeah, it's, I don't know, it's good. It's an interesting spot. You know what I mean? Interesting spot. Because I definitely could see either side here. Well, I think if we get some selling, I think, again, I could change my tune then, but I think that's viable. I really do. I think it's viable. Yeah, you got seasonality. I think you got the Fed that even if they tell us one thing, we'll see with the financial conditions. Um, I think they're going to be looser. You got the elections. You got QT dry up period. You got buybacks coming back into play. You got CTA flow pretty lopsided. So it's going to be hard for this market to. It's possible, but to bust lows, it's going to need a catalyst. And listen, that catalyst could be the Fed hiking 75 and being hawkish, but I don't think they have the balls to do that. I don't think so. Yeah, you got inflation already cooling. Honestly, I think if we could get a little shakeout, I think it's worth the shot for upside. And honestly, we don't even need much of a shakeout. The problem is you got the Fed in the way. That's the problem. If you didn't have the Fed in the way, you know what I'm worried about? I don't want this thing to rip off the freaking Fed. Because if it rips off the Fed, we're not going too far. Yeah, well, they keep close tabs on the Fed there, and basically they've been saying that the Fed can't continue to do what they're doing here. So definitely some reprieve. Now that doesn't mean the market's got to rip to the upside. We could just get like a bullish little phase here. Again, individual names, I think, is where the money's going to be made. Because you got these mega cap techs too. They're going to have to participate if you want some clean upside. But look, we could still be in full-fledged bear market, right? And I'm no technician. Oh, well, you know what I mean. You know what I mean? You got room there. And still doesn't change anything as far as what we're seeing now bear market wise, right? And honestly, I think if it goes to the end of the year, you may even get a false breakout. How about them apples? I think that's a possibility. Where is the 200? Yeah, that's right there. Like if you got a fake breakout here, you don't think you'll have a big change in sentiment? Wash out a lot of those bears and bulls will think this is a bottom and everything else. So, that's why I'm not all that bearish here. Yeah, and then we're back to square one again. Monthly, you're saying? Let me see the monthly. This is the monthly, right? Look how it makes it look so nice and easy on the monthly. What's the weekly look like? And the Elliott Wave crew, right? I don't know if any of you guys are Elliott Wave fanatics on here, but I think they're looking 3,900, 4,000 or something like that. Or maybe 4,200, but they're looking similar. Basically, if I remember correctly, they're looking top of this downtrend line. So call it 4,100. The Fed's in the way. Otherwise, I think it would be, and I think it would be a good thing, but it would be a choppier move instead of just the rip. I think it could last longer, but we'll see. You know what I mean? Ooh, there's so many damn things that could happen, especially in this bear market. You got every other day there's a binary event. You guys realize that? Every day. Like if you're holding overnight risk, you have to hedge every week, right? Seriously. If you got any overnight risk, you got to hedge every week. You can't take hedges off. You have no breathing room. Yeah, you got a million bulls in the air. Earnings, China, EU, the Fed, inflation. It's insanity. I know you could do it through time, so it's true. You could get there through time instead of upside. Yeah, Putin nukes. That's why I think it would be it would be more constructive if you had the 2 steps forward, 1 step back type action, because you won't get all that heat at once. Because once you get all that heat and sentiment flips, it's over with. When are we getting some good news? Well, the news is, I mean, the news is even that bad. You know, where's the bad news? There's bad news. I mean, inflation's cooling. That's good news. The Fed may pause. That's good news, I guess, in a sense. They're not going to do it for good reasons, but sometimes good news is bad news. You know what I'm saying? You want bad news to be good news, so it's not bad news because the good news is bad. It's the way the cookie crumbles. Guys, as always, a pleasure. Enjoy the rest of the night. All right, I'll see the majority of you tomorrow. For those of you members, you got Hartnett tonight. Let's see what he thinks. Have a good night, everybody.